Hello everyone, welcome to yet another weekly analysis. For this week, we're going to still once again focus on the dollar. You know, it is very important that we tend to keep our focus on a particular instrument, a particular pair, so to speak. Now, for this week, it is different from what we said last week because the markets have obviously turned around and given us a different direction. So it is important to be realistic. It is important to adapt to what the market is saying because your opinion does not move the market. In as much as you would like to think your buys or sells move the market, but you know, banks like JP Morgan Chase, CEO Jamie Dimon, these are the people that actually move the markets, right? The fiscal moves the market, meaning the government moves the market. If Trump speaks, the market is moving. Your buys or sells, your 100K accounts, $1 million accounts, they do nothing. JP Morgan moves $1 trillion every day, so or every week or every day rather. Sorry. So it is important to know that your opinion does not move the market. Your opinion has nothing. Your bullish or bearish, directions in the market or biases in the market, they do nothing. So notwithstanding, I need us to understand two things. So I'm going to talk about two things because I learned a lesson last week and I have to relate to you lot. So this week we're going to talk about trending markets and ranging markets. Now it is important to understand what a trending market looks like and a ranging market looks like. A trending market looks like higher highs and higher lows. That's what it looks like. A trending market looks like what a higher it looks like higher highs and higher lows, like so. When the market is trending, it looks like this: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Simple market structure. It is textbook. There is nothing special. There's nothing different. When the market is also trending downwards, lower lows, the opposite, right? And then when the market is ranging, it does this. It goes up, goes down, goes up, goes down, goes up, goes down. It does this in a range, meaning it does this in an up or down, fashion, or in a zone rather. In this zone, right, the market is trending now. I would like for us to see, or rather, when it's going against the original trend, but it is basically, underneath a range or a zone that has obviously pushed the market to the downside. The reason why I'm saying this is because I'm going to show you, some things that's happening on the dollar. Now, in as much as the news is affecting the dollar, right? Because obviously, there's a peace, there's a ceasefire going on with Iran, and then it is obviously affecting the markets, meaning oil prices will drop, the dollar will drop, the gold will rally to the upside. Easy things, right? Easy, fundamentals. But we also have to come to understand that the technicals have a part in the market, meaning meaning we come onto the technicals to look at where prices is going, where price is at, where price is headed from, where price could go to and then react off of. These things affect, these things are found only on the technicals, right? So, so let's talk about what I just said. Now, on the monthly time frame, we have to come to understand something, right? We are very much bullish on the monthly time frame. Yeah, structural wise, higher highs and higher lows. Until we break the last low, then we are still bullish, right? But I want us to understand something, right? This is the range where we are in right now. From here to here, this is the range we are in right now. So meaning the last time the market, got here, it went all the way down here. The last time the market was here, it went all the way up here. So we are in a range. So we can actually trade in ranging market, but a ranging market is harder to trade than a trending market, right? You know, when the market broke above, when the market broke above this range right here, this low range right here. Now this is a trending market. We're going up. We're going in the direction of the market structure. That is what I call the trending market. If we're going opposite the direction of the market structure, and we seem to be in a zone that has obviously taken the market to the downside or to the upside, we are then in a range. Now, ranging markets are quite tricky to trade because everything else will be in a range. The weekly time frame will be in a range, the daily time frame will also be in a range. So it is quite tricky to trade. But as long as you are trading in the direction of the monthly time frame, you are good to go. I say this again. As long as you are trading in the direction of the monthly time frame, you are good to go. Meaning the monthly time frame is obviously bullish. Structural wise, let's not deceive ourselves. We know what we're saying. Structural wise or bullish. For us to be bearish on the monthly time frame, we have to break this structure. But we're not going to obviously wait for the monthly time frame to break this structure for us to then say we are bearish. No, we can anticipate. The name of the game is called anticipating. It shouldn't even be called trading anymore. It should be called anticipating. We anticipate. But the common denominator in all of this, in ranging market, in trending market, in anticipating for for the markets to make a specific type of move, it's the monthly time frame. The monthly time frame, top down analysis. You see what I'm saying to you? The monthly time frame tells us the direction of the market. It's very important. Now, when you have the monthly time frame, direction in mind, because it is quite tricky to get a direction, because sometimes the market may be in a range, it may be trending, and you may not know what to do because now you're buying, you're selling, you're buying, you're selling. It's quite tricky to get a trend, a direction, but it is also fairly easy to get a direction because we are getting the direction off of one time frame, the monthly time frame. This is the overall time frame. This is how it has been. This is how I met it from. This is how my mentors, or rather, that really teaches it. And I'm not going to look for any other way, or not look for any other way, but I'm not going to, try to disprove it, because, these are people that are obviously doing better than we are. So what all we have to do is, adapt, learn from it, fit it into our own personality and our own mindset. It's something, and make it work, right? So I've been doing this. This is my fourth year, right? This is my fourth year of consistently trading every day, coming to the market Monday to Sunday. You see, I'm here to you. So I can tell you for free that if it's on the monthly time frame, yes, trust me, you want to be there. Now, on the monthly time frame, we have established that we are in a range because we are moving against the structure, and we are also below a point or a zone in the market that previously pushed it down. Previously, what pushed it down? Previously, what pushed it down? So we can anticipate that whenever we come underneath this zone right here, we can anticipate that the markets are going to what drop all the way to the downside. Simple as ABC, right? But there are common factors that would stop the market from doing so, and we have to understand that. It's either or with the market. It's either or. It's either going up or it's coming down. It's either coming down or it's going up. You have to come to understand that. You have to keep this in mind. It is. I wouldn't say it is bad, but it is not advisable to be rigid with one direction. You have to have two directions in mind. If this happens, I do this. If that happens, I do that. With this way, you are flexible, you are malleable, you are able to adapt immediately when the market decides to do something different than you've already planned, right? Now, on the monthly time frame, we've established that we are bearish. Why? Because we are in a range. We are going somewhere we've been before. We are going somewhere the market has pushed from before. So on a weekly time frame, we come to look for chart patterns, look for areas that the markets have from double tops, double bottoms, the likes of them, right? I'm not gonna go too deep into that, but I just want to give us a rundown of where we are headed, or what the lesson we learned from last week. Now, if you notice underneath here, I have something called the bottom of the weekly range. This is the weekly. This W means weekly. Bottom of the weekly range. Now, if you look at this level right here, if you look at this range right here, you will notice that when the market got here from the double bottom, it changed direction and it pushed up. Now, it is very important to understand this. I said it changed direction. It will change direction or is in a range. Now, the market then came back down to that same level. Now, I wasn't expecting the markets to, go back up. I was not at all because it has created a lower low, close below all of these lows, body close below all of these lows, these lows. And then I was expecting the market to come down and then it went up. Now, these lessons were revealed to me this week, but it's fine because at the end of the day, I'm going to make money off of these lessons. My best part of trading is when I take a loss and I learn from the losses and I journal my losses, I meditate on my losses, I backtest my losses for weeks. It's something to you, and then I get an opportunity to trade with those lessons I've learned and I make money off of it. I profit off of them. That's the best. That's the best time. That's the best feeling I get from trading, and that's revenge trading. I've basically gotten my league back, right? Anyway, back to what we are saying. Now we are basically also in the range on the weekly time frame. This is what I said. Whenever we are in the range on the monthly time frame, I expect the weekly time frame to also be in the range somehow, somewhere. And so we are in a range right here. So we see that you know the markets have pushed up, it has pushed down, we are back into an area that obviously shifted structure on the weekly time frame. Listen, it is a no-brainer. It is a no-brainer to think that the markets will be headed here. You have to think so. And if you also look at what's happening fiscally, government, fundamental wise, this ceasefire, excuse me, this ceasefire with Iran is also going to be a time where the dollar gets to reset, gets to go to weak again. Oil gets to be, oil prices get to be lowered again, and then gold tends to rally again, right? This is the time, and you can see like at least in this space of 2 weeks from now to next week, right? We should at least be able to have gotten down to this level, and then when we get here, when we get to this price right here, then we can then fold our hand to watch. All right, what's going to happen? Are the market's going to go back up? Is the war going to commence, or are we going to indeed see peace and then just keep on falling to the downside? We do not know that. We do not know that at all. But what we know is this: is that we are basically expecting the markets to fall all the way to this level right here. That's all I know. That's all I see because of what has happened in the past. All we have to do is look left. I cannot predict the future with the present. I cannot. We can only predict the future with the past, with history. And we also know the saying that says that goes history repeats itself. And so it does with trading. I promise you, right? So now this happened when the ceasefire was announced, and then I begin to wonder how is it that my zones tally with what's going to happen in the future. Technical analysis is as simple as ABCs, right? Now let's go down to the daily time frame, right? On the daily time frame, we have seen that we are bearish. So not only are we bearish, we've broken structure on we've sorry not broken structure rather we are bearish on the monthly time frame because why we are in a range. That's why we are bearish. You know, we are bearish on the weekly time frame because we are coming from a range. We are anticipating the markets to fall all the way to this side, to this downside right here, to this level right here. We're anticipating the markets to come all the way here. That's what I'm saying to you. We're anticipating. Emphasis on anticipating. The weekly time frame may not be bearish yet because we haven't broken structure or nothing else, but our job is to anticipate where it's headed. Our job is to predict or say, all right, I'm gonna head the market is headed here, I'm gonna trade into that direction with the monthly time frame in perspective, with the monthly time frame, saying, all right, let's go together. We're not trading off the daily time frame. We're not using the daily time frame trend. No, no, no. We're not using the weekly time frame trend neither. We are using the monthly time frame trend. So imagine then we are looking to sell on the daily time frame. We're looking to sell on the 4 hour time frame. We're looking to sell on the 1 hour time frame. We're looking to also sell on the monthly time frame. Tell me how the weekly time frame is going to go against all of that. It's quite impossible, isn't it? So the daily time frame is what we come to look for the most immediate trend in the trend, within the trend, right? Because we cannot trade on the weekly, neither can we trade on the monthly. So we come down to the daily time frame to see, all right, where are the pullbacks going to be? Where are the pullbacks going to happen? How is it going to look like? The rejection candles, candlestick patterns, the candlestick patterns, how are they going to form? When are they going to form up? I need to see these things. Now that's what I'm going to emphasize on. Now, whenever we have a pullback, right? Whenever we have a pullback, especially on the daily time frame, on the weekly time frame, on the 4 hour time frame, right? I need you to understand something, right? Before the market reverses at any point in time, it will tell you. If you've read Candlestick Bible, right, there's another one written by Richard Nelson. It's written in black and white, not this edited one by the West. You see all up and down, right? There's one written by the West. Sorry, there's one written by Richard Nelson. It is black and white, right? It is one of the best ones I've seen. The Candlestick Bible. It also tells us, it tells us, what each candle does. You see what I'm saying to you? It tells us what each candle does. Now, when you see a push to an area of interest, because it's very important to understand that it's not just any area anywhere in the market, but at certain points in the market, we tend to see these candles appear. Now, when you see a candle like so, like this one, right, like so, right, after we've touched the area of interest, and you see this how would I call it? This inverse hammerhead, right? Or a hanging man, or a small body candle, or a doji, however you want to call it. But you make sure that the body is smaller than the wicks itself, the upper shadow and the lower shadow, right? That's what it's called, right? Upper shadows, lower shadow. You make sure that the body is smaller than these wicks. Now, when you see these things, right, form up, or when you see this kind of candle form up at an area of interest, I kid you not, a reversal is about to happen. I say it again, a reversal is about to happen. Now, if you look in here, you will see this is the exact same candle right here. The color doesn't matter. That's what the book teaches. The book tells us the color doesn't matter. The only time a color would matter in the chart is when it's a bullish engulfing, just like so, against a bearish engulfing. So against a bearish candle. It's something because why it's red and it's gray, so the colors just like so, right? The colors matter, right? But in this case, the color doesn't matter as long as it is a small body candle, like so, with long shadows up or down, with long wicks up or down. Expect a reversal. It is a sign of you know indecision. It is a sign to tell us that all right, sellers are done. We should be expecting buyers to take charge of this specific time in the market. I'm not saying it is a battle between buyers and sellers, but that's what most of us understand, right? Now we see this bearish engulfing or this hanging man, forming at an area of interest. So what I'm trying to say is this: these things they form up at areas of interest, right? They don't just form up. You don't just look for them at midpoint in the chart. They form up at what areas of interest. Now I'm expecting the dollar to do this, to come into this level right here and then drop. This will in turn mean that the Euro USD, right? Because this is what we are trading. We're actually trading the Euro USD, but the dollar index gives us a broader perspective, a bird's eye view of where the other pairs will be headed. I advise you, you need to adapt, you need to attach it, or use this in your training. It's a game changer, I tell you. Now we're expecting the dollar, or sorry, the Euro USD to do this. This is what I'm expecting the Euro USD to do. And then I look for buys to the upside and execute off of my entry strategy, right? This is what I expect the Euro USD to do. Nothing more, nothing less. Now, should in case that peradventure the Euro USD decides, or the dollar rather decides to keep on, falling and dropping and then going to the downside, just like so, should in case the dollar decide to, say, you know what, I'm not going to reverse, I'm just going to keep on pushing to the downside. It is my job, and it is your job to react and adapt. It is your job to go to the lower time frame, in this case the 4 hour time frame, to look for breaks, a break and a retest, and then keep on selling to the downside. Because if you then say, oh, I'm still waiting, you keep on waiting forever, right? You keep on waiting forever. So it is your job, and it is my job to react and adapt and see what the market is doing, and then react off of it, and then try and make the best we can off of it. And that's it for this week, right? Because it's easy to understand that the direction of the market, entry strategies, patience is what matters. I will not say this enough. Patience is what matters. We may not even get a trade this week. We may not even get a trade next week. But I tell you, if you wait long enough, patience will definitely play in, and then you get the best entries you want to get, and then you make the best profits you want to make with less risk. With what? Less risk. It's very important. With less risk, this is the most important part. Risk management is the most important part, right? But without winning trades, risk management will mean nothing, right? Trust me. So let's be patient, right? Let's be patient. Let's expect the markets to do this, right? To do this, right? Or do this. Let's just expect the market to do either or, right? To do this or do this. Let's expect it, right? So this is what I'm expecting, and I'm going to wait. And I see signs, like I just said, on the daily time frame, I see signs that the market would go up, because I do want the market to go up. I do want this pullback to happen. I find I relish it. I need it to happen. I need it to happen. If I take my Fibonacci from swing low to swing high, like so, you will see that we are just right we're just right, on the money, right? We're just right on the money. Like so, we can see where the golden zone is, right on the money, right? And then if you notice, I draw my lines, my areas of interest ahead of time. So you will see that it falls in line with Fibonacci with Fibonacci, areas as well. It falls in line. See how perfect it looks, right? You can see how perfect this is, really close. You see what I'm saying to you? See how perfect it looks, right? It's right on the money, like I just said. So let's follow our training plan. Let's follow the monthly time frame. Let's follow the monthly time frame, because most people go on the 4 hour time frame and daily time frame to look for trends. I don't know. Do you in it? Do you? So let's follow the monthly time frame, and let's go where it's headed. Open your eyes to understand that we are in a range. The dollar right now is in a range. So if you see a range on the weekly time frame going, if you see the weekly time frame in the range, up or down, I expect you to understand that when it gets here, it's going to drop. When it gets here, it's going to react. So see you next week. Ciao, ciao.